The UAE, I think it's ahead of the curve. That what we are witnessing now in the world. We have hit the stumbling block in 2008, and we are, I think, recovering in all aspects of the economy. Maybe the construction is needs a little bit time to heal from its wounds that has been inflicted earlier. But what we have witnessed this year of I'mar and Nakheel launching grassroots properties, it's sending a little bit of a positive signal into the property market. But other indicators that, like trade, is up by 18%, about 18%. Re-export is still booming. The hospitality business is where occupancies of hotels are high. Airport is every time we hear a record of each and every month. So I think we are on the right track. It needs some more time to heal from the other things, but we are on the right track. We are, as I mentioned, GCC, North Africa, the MENA region, and especially also subcontinent like India. We are focusing in India, where we see that there is a boom is coming in India, and an Indian market, we know it because we have some partners that are also working with us from India, and we are leveraging that capabilities to enable us to penetrate. And at one time, I always tell our partners, one time India was a sleeping giant, and you have come to our part of the world to build our, the UAE and the Gulf, and now India is booming. So I think it's the right time to go to India to also benefit from that boom. I always say that unless you have a competitive edge, don't go. Because if you don't have any competitive edge, you will be lost. I tell even a younger generation that you have to capitalize on your strength rather than your weaknesses, because that weaknesses will always hinder you and bring you down. Wherever we found that we have gone up to Malaysia. We have a small investment into plantation here in Malaysia. So as far as we went is Malaysia, because I would say because of culture and maybe religion and knowing the people, and the people knows us, it's much more easier. It's very difficult for me to go to China because it is a very difficult market for me to, and it is important to understand where is your limit and stop. We had debate on this, a long debate on this, to go public or not to go public. At the beginning, the percentage was a little bit distracting for us, because at least I think it was 45 we could hold, and then 55 we have to put it into the market. Then it has come down now to 30% or 25%. But you see, it is two of our organization. One is a cement factory, and the bank is a public companies. But our constraint is the family name. If I don't do good in this business that I floated into the market, I spoil my business, business name, the family name. How much do I have to leverage this and all that? That is a problem for the business, family business, is that when they go public, they are exposed in one way, but another thing is that if they don't do well, maybe it could happen,